Hello, Warriors. Dale Pinkert, TradeGATEHub.com. Traders call me Coach, and we're powered by TradeView Markets, the broker where you could trade everything and do it at competitive spreads, which is also important. So keeping your trading costs down. I want to talk about how you probe and protect when trying to pick a top. Okay. So, this is crude that it's battled all the way back. I don't have any fibs here, but, it's my contention that we're not going to take out this 130 high. So I'd say we're probably 78.6 back. So I'm probing it for a top. If you were in the main chat this morning, you would have seen, you would have seen the sell at 2092. I was looking at this as being a possible failing rally. Alerted people at 2092 have already taken partial profits. If you did it, you have 70 pips. And now you trail your stop to BE at 92. And the worst thing that could happen is that you made money on half of your position and give it a chance. You never know if you have a top, because that's a rear view mirror exercise. So it's only when you look back at time. But when you're getting to areas where you think a rally is starting to lose momentum, which you could see happened here, see this confirmed high that we had on the blast, and then I thought we were going to top here and pull back to 112, and that's a very important area, 112 to 110. You're going to see some negative action if we just start taking out. Here's your first stop hunt under 117. You could probably even tighten it up, and under yesterday's low and the 9-day moving average would be your first sign of some type of rollover. So that's how you do it. Now, of course, in some cases, I might have sold it up here I started with a $1.50 stop over this high, and I could have gotten run over and I would have been gone, right? But I looked at this as being a potential at least ABC failing rally here. I didn't sell it up here, but as you can tell, even on the daily, we're not confirming. That's a 15-minute, but the daily, we're not over 70. There's your 4-hour. You have two successive lower RSI readings here. Here's your 2-hour. Glaring divergence at new highs compared to this high. See what happens on, go to all the TFs. Glaring divergence even on the 1-hour from the last high. And even if I go to my microscope, we did not have a confirmed high up here on that rally towards 121.5 this morning. So we'll see what it turns into. 1 hour at a time, 1 day at a time. And to get a 2-day reversal, I need closes under 119.01 today. Tomorrow it would be 119.82, which is pretty doable. And then we'd have to take it out to the weekly for a more macro signal. And that's probably not going to happen this week with only a couple days left. We'd need to close under 115.08, that area I showed you. But next week, to have a 2-week reversal should be pretty possible, because you only need 1982, and 1982 came up a little while ago. So write that number down. Back under 1982 is also going to be a sign that this thing is rolling over. So let's get to what everyone at FX3 is talking about, and they're probably talking about the ECB and how hawkish or dovish Lagarde will be in the presser. A lot of people are saying if we clear 108, we're on our way to 109, 110. I'm with them on that, but if the ECB disappoints, as you could tell, this was a pretty shallow pullback. We only had this pullback back to 38%. I thought we might get deeper, and I have a core euro position in cash for a while, and for leveraged, I'd be looking for 50% and being patient. Now, there are a lot of numbers that are going to make a difference besides the ECB. The CPI on Friday is going to be a big number. I'm guessing that if we get more benign inflation numbers, the dollar will sell off. The risk is probably that we don't. So there's a lot of people looking for, a continued bad number, but one number could be enough to really squeeze people. And I think if the squeeze is going to take place, it's going to take place in the S&Ps trading within this rectangle here. So when I was on with Mike yesterday, we were talking about what might generate the next wave up in the market, and that would be a benign CPI number. As you can tell, the 10 years so far, I talked about this yesterday on the broadcast with Mike, we did not make new highs in yields. There's your 4-hour, and in fact, we're trying to put in a failing rally here. Although now that I look at the 4-hour, it wouldn't surprise me to get one more high, and that is why, because this is not just about giving you trading ideas, it's about teaching you. So what kind of high is that we had in the on the 4-hour chart and the 10-year yield chart? 74. So I would say it was confirmed. I was looking for maybe a third drive, but third drives don't happen with RSI confirming. They happen with RSI diverging. So perhaps we are going to go for another rally high there. Something that's going to be important and really an acid test for everything is going to be what happens with the bonds. And for weeks, or the last couple of weeks, I said this looked like a 4, which is going to be followed by a 5, which means a break to new lows. I don't know if it's going to be 108, 110, 106, but the form of this says we should get new lows. And that's going to be a real test for the dollar. And if the dollar rallies on this, I'm going to use any kind of dollar strength to sell into. I came in long the dollar this week. So far, we've had some problems up at the old high, but if we would be able to clear 102.70, we could get a rally to 3.5, which was a target that I talked about. The buy last week in the trading room was down here on this candle a little early at 96, and we got down to 10, what was that low there on this day? Yeah, I bought it at 96, low was 84. This was a day. Okay, I was early, 86, and it went all the way down to 66. So I had a 20 pip drawdown buying this break and pitched it yesterday. It's kind of neutral going into the ECB. So I don't have any position in the dollar, but if we get a disappointing statement from Lagarde where she doesn't sound as hawkish and the dollar rallies one more time up towards 103.5, it's still my contention. I'm playing it like the dollar has peaked. Look at the yen compared to the dollar, something else I showed you. So dollar, obviously, what would you rather do? Try and top pick the yen or look for a failing rally, a lower high to sell into? And that's what I think is going to happen there. When it comes to precious metals, higher rates may also create a little downdraft. I'm long. I have a core long position in the miners and precious metals. And when I look at the gold market right here, yeah, it looks like, it's just grinding sideways. But as I said Monday, if we get a breakdown here to 1810, 1820, I'm a buyer. And we start clearing, like I said, the next real big area didn't really come in at the high that we had last week. It's this flat bottom here. Oh, well, it's a different color. Anyway, you get the picture. 1890 is really an important level for gold. but if we should take it down to 1810, 1820 on, however it reacts to the CPI. And then next week we have the Fed. Okay, so a lot going on. Also, if you follow any kind of GAN work, you pay attention to markets when you're approaching the end of one season and the beginning of another, and we have the summer solstice about 2 weeks from today on the 21st. So it would be a week from next Tuesday, I believe, week after the Fed. So, okay, a lot of things happening there. So there's going to be pretty good action, I think, with the CPI number. I think the S&Ps need at least the people to come in and say, I told you so, inflation's peaking. But I've seen analysts talk about how inflation worked in the 70s, and you had little, price peaks in an overall uptrend in inflation. So just like any other chart, nothing goes straight up, and just the rate of inflation, if we just start moving sideways on a few items, that's going to say we're at peak inflation. What you really need for peak inflation, at least to really begin, is really for this is the biggest component, right? So if this could turn into a failing rally and we have something like this from a lower peak, that would help. Okay, breaking under 94, that would help. Breaking out over 135 and going to 150, like a lot of the bulls are saying, will not help. Let's see what else I want to cover here. So we'll see what the TLT is down at 1453, down 59. Sure looks like it's going for new lows. The weekly low was confirmed. Let's see if we end up with any kind of divergences. The low is 112, so still a few handles to go. We'll see what happens. Maybe it bottoms on a bad CPI number. But this is going to be the acid test for everything. For the dollar, the dollar will be affected by this, and I think that's going to set up a rally to sell in the dollar and perhaps a break to buy in euro. Perhaps it sets up a better buying opportunity in gold, or it could just go from here. But I think higher rates are going to give us entries cheaper and all the things we want to buy, and entries for shorts on perhaps some of the things we want to sell. But the dollar and the oil are the real linchpins here. And let's see if probing and protecting on a potential turn, that's a lot of P's, and my last name's Pinkert. Let's see what happens with energy over the next few sessions. There is an EIA report Mike Venezia made me aware of. So right now, if you took the signal, you're up, 72 pips. You could always take half and go BE stops. You never know, could turn into something. And start looking for sell stops here and sell stops here and sell stops here, and the granddaddy of all stops. And when people start saying, oh, there is demand destruction, would be under here. So have a great interview tomorrow with Gareth Soloway. Gareth has made some great calls. He was bearish of the market at the beginning of the year. He was bearish Bitcoin from much higher levels, and I believe he one of his strongest conviction trades last time I talked to him was in the gold and silver market. So we'll get an update from Gareth Soloway. He started in the money stocks, so looking forward to that. It's going to be a different time to accommodate Garrett. It's going to be at noon Eastern. So mark your calendars for that. Gareth has a huge following, and going to be welcoming his followers to TradeGATEHub.com, as I welcome you and Mike does every time we're out here broadcasting. So make every trade not just a profit or a loss, but a lesson, and know what you're doing so you can repeat the things that work most of the time or more than half of the time, and avoid the impulse trading and things that hardly ever work. So good luck today. Good hunting. Remember, don't just count your pips, count your blessings. Let's keep an eye on the crude and see if the news that happens here between the ECB, CPI, and Fed next week provide the breaks and the buying opportunities in Euro, Aussie. Still think Aussie could make a move down towards this under 71 level. It tried to reverse. It's really holding up well, but we take out yesterday's low of 71.56. That could get you down to 70 and a half. I'll be interested in buying the Aussie, being a precious metal bull. And one of the more surprising things that's been going on here is the move in FXI. And I know Mike has caught some of the Chinese stocks and started booking profits. But that's a fairly constructive chart. To me, looks like, here, I'll give you a lesson. Looks like a ascending triangle. So we've seen plenty of descending triangles. Let's look at what an ascending triangle looks at. So this is your breakout line. Okay. And here's the bottom of the ascending triangle right here. Something like that. Doesn't mean we can't make another trip back down to the line. More likely would be some kind of pullback. In fact, China is the only central bank that is easing at this time. So really the only bank out of sync. I mean, Japan's dragging their feet, but they're not easing. So when you look at this formation, the way you measure the move, let's call it 26 to 34 and a half, that's 8.5. Breakout over 34 and a half is going to take you to 43. Let's see where 43 is on the weeklies. Up here around this 200 week moving average, high or low, on the verge of making this be a false breakdown here. So China looking good. So I guess we don't have to worry about them invading Taiwan as long as their stock market is going up. Don't just count your pips, count your blessings. Mike will be with you in an hour and 15 minutes. Let's just take a last check on the WTI here. And we're sitting near the low of the day, 2003, and that's a pretty negative candle. So don't drive, and then wait to fill up your tank. In about 3 months, it'll be cheaper. And I'll end it on that, everyone. Have a great day, good hunting. Tune in for Michael Venezia, one of the best stock pickers I know, that covers a universe more than I could ever without my head exploding. And I'll see all you guys later. Thank you, my trading warrior brothers and sisters. Adios.